Hi there, in this video we will tell you who now pays 25% instead of 19% corporation tax in the UK. Watch it.
Hello there. If you're a director or owner of a UK business, the next few minutes could be some of the most valuable you'll spend this week. We're going to walk through the massive tax changes coming in 2026 that are absolutely going to affect your company. And to make sure you're getting the best information, this entire guide has been put together by the expert tax advisors at My Tax Accountant. They're on the front line, so let's get straight into what they say you need to know.
Right, first up, a quick question for you. Did you know that from April 2026, some of the penalties that HMRC hands out are about to...
That's right, they're going to double. We're talking specifically about the penalty for filing your corporation tax return late. This one change really sets the tone for 2026. It's going to be a year where being organized is not just good practice, it's absolutely essential.
And like we said, everything we're covering comes straight from the team at My Tax Account. They put this together to give you a clear, no-nonsense look at what's on the horizon so you can feel confident heading into these changes. Okay, so let's get into the nitty-gritty. Starting with the headline, corporation tax rates. These numbers are really the foundation of your company's tax bill. And figuring out where you land is the first big step.
So here they are, the rates for the 2026-27 financial year. It's basically a three-tier system. If your profits are up to £50,000, you're on the small profits rate, which is 19%. If you're making over $250,000, you jump up to the main rate of 25%. And for all you businesses in that middle zone, there's a system called marginal relief. In a nutshell, what you pay is tied directly to how profitable you are.
Let's make this feel a bit more real. Picture a small, independent cafe in Manchester. Let's say their annual profits are around £40,000. Well, they fall neatly into that first bracket, so they're paying tax at 19%. That lower rate gives them some really vital breathing room, you know? It means more cash to reinvest, maybe hire a new member of staff. It's designed to help exactly these kinds of businesses.
Okay, so what happens if your business is doing well and your profits land somewhere in that middle territory, say between 50 grand and 250 grand? Now, this is a point that catches a lot of people out. Do you suddenly get hit with the full 25% rate?
Well, thankfully, no. And this is where something called marginal relief kicks in. The best way to think of it is as a gentle slope, not a steep cliff. It's a clever system that gradually increases your effective tax rate as your profits go up. So a company with profits of, say, £60,000 isn't going to pay 25% on that. Their rate will be just a little bit over 19%. It stops growing businesses from being punished the second they pass that first threshold.
But listen, your final tax bill isn't just about the rate you pay. What you can claim against your profit is changing too. And there's a little-known rule about how your companies are structured that can have a massive impact. You'll definitely want to hear this part.
From April 2026, the tax relief you can claim on some of your key assets is actually being cut. The main allowance, which covers things like your work equipment, machinery, and even office furniture, is dropping from 18% down to 14%. What that means in plain English is it'll just take you longer to get the full tax relief on those essential purchases. That's a big deal when you're planning investments.
So here's a quick tip for you. If you're thinking about buying any major new plant or machinery, you need to look into something called full expensing, and fast. Until the 31st of March 2026, this lets you deduct the entire cost from your profits in the same year you buy it. Timing that purchase to happen before the deadline could make a huge difference to your tax bill that year.
All right, now we need to talk about the Associated Companies Rule. I'm not going to lie, this is where it can get a bit tricky, but it is so important to get your head around, especially if you have an interest in more than one business.
Let's break this down nice and simple. If you control more than one limited company, HMRC links them together as associated. Now here's the crucial bit. You have to divide those profit thresholds by the number of companies you have. So think about a freelancer in London who runs two separate limited companies. That £50,000 threshold is immediately sliced in half to just $25,000 for each business. And just like that, you could find yourself paying a higher rate of tax much sooner than you ever expected.
Okay, so we've covered corporation tax. But tax isn't just about profit, is it? If you operate from a physical place, a shop, an office, a warehouse, your costs are also set for a major shakeup in 2026 because of a huge overhaul to business rates.
The government's new approach here is pretty clear. From 2026, there will be permanently lower business rates for businesses in retail, hospitality, and leisure. But there's a catch.
To pay for this, they're bringing in a new, high-value rate for properties with a rateable value over £500,000. It's a very clear rebalancing act to support smaller high street businesses paid for by the bigger players.
So, who wins and who loses here? Well, the winners are clearly those smaller, independent shops, pubs, cafes, and restaurants. You know, the lifeblood of our local high streets. They'll benefit from lower rates. And the losers? That'll be the businesses in very large properties. They're the ones who will be funding these reductions with their higher bills.
But that's not all. This next change is even more important, I'd argue. It's all about how you deal with HMRC and the pretty serious consequences of getting it wrong. Stay with me here. This affects nearly every single small business in the country.
April 2026 is going to be a massive month. As we've said, late corporation tax penalties are doubling. Making Tax Digital is also rolling out to more sole traders and landlords, pushing everyone towards digital records. And crucially, HMRC has been given significant new powers to crack down on mistakes, non-compliance, and fraud right across the board.
And look, don't just take my word for it. This is a direct quote from the official budget report. It says, HMRC is getting enhanced powers, not just against taxpayers, but also against tax advisors who help people bend the rules. They're also getting tougher on fraud in specific industries like construction. The message is crystal clear. Compliance is the name of the game now. So, with all of this coming down the track, new tax rates, changing allowances, different business rates, and a tougher HMRC, what should you actually be doing right now to get your business ready? Okay, here's your action plan. First, review your profit forecasts so you know which tax bracket you're heading for. Second, and this is a big one, identify any associated companies. Don't get caught out. Third, plan those big asset purchases to see if you can use full expensing before it ends. Next, if you have a physical location, start budgeting for the new business rates. Get your digital records sorted now. And finally, and honestly, this is the most important one, get some expert advice. Don't try and navigate all this on your own.
Now, it's really crucial to remember that what we've covered here is general guidance. Tax rules are incredibly complex, they can and do change, and every single business is unique. What's right for a cafe in Manchester might be completely wrong for a tech startup in Birmingham.
So, to make financial decisions that are genuinely right for you and your business, we really do encourage you to speak to an expert. The team at My Tax Accountant put this guide together, and they are ready to give you personalized advice built around your specific circumstances. Their details are right there on the screen.
And finally, if you found this helpful, please do subscribe to the My Tax Accountant channel on YouTube. It's the best way to stay informed with more essential updates for UK business owners. Thanks so much for watching.